Hey everybody, this is for my ACC 203 Managerial Accounting course, both for online and my in-person course. I wanted to take a minute and focus on some of the most critical elements that we're covering here in the module, right? We are covering chapter 20 this week, which is process costing. So I've done a couple of lectures for the in-person. For my online course, just know that the difference between process costing and job order costing is that process costing is made for manufacturing processes, companies that make products that aren't really different from one another, or it's difficult to trace costs to. These are things like oil refineries is a common example. Right, so for oil refineries, you're refining this big batch processing of oil and turning it into a product. But there's cost along the way. There's different steps along the way, but it's difficult to really differentiate the cost with the different steps. So we need to come up with a way to allocate cost to these items. Whereas job order costing that we talked about in chapter 19. It's a little bit easier, right? Because if you're a car manufacturer, you could have different types of cars, different products with different SKU numbers, different job numbers, and you can allocate materials to that job. You can allocate time, so labor to that job, overhead. And as the car is completed, it goes into inventory and the costs are embedded with that car, right? Even if the process is automated. And there is some batch process there. There's uniqueness. Whereas an oil refinery, you're making big batches of product, and it's tough to differentiate the different elements to assign costs. So when we talk about process costing, the most difficult part is determining the cost, the equivalent units, the unit cost, and then allocating that to the items that were completed in that month, whether or not they've been transferred from the next process or not. So with process costing, we have inventory, and we start with raw material, and then we have multiple work in process accounts, and the multiple work in process inventory is the multiple steps in the process. Whereas job order costing, it was raw materials, work in process, finished goods sold. Now it's raw materials, multiple work in process accounts. And as one department finishes the work in process, it moves to another. We're transferring costs from one to another. We're building up cost as we go through the process until we're ready at the end to sell. And when we're ready to sell at the end, it goes into finished goods. And then when we sell it, it goes to cost of goods sold. So let's talk about the steps here. And let's see if this helps a little bit. So step one is we have to determine the cost to be assigned. And so in order to determine the units to assign the cost to, in order to determine the units, we need to understand what unit of measure we're using, or what is the definition of a unit. For this example, we're looking at an ice cream company, Frozen Delight. So we're going to use gallons. Gallons would be the measure of the unit. So, and we have different groups. So group one is going to be the beginning balance, the beginning inventory. Group two is the inventory that was started and completed in that month. And then group three will be the items that are still in process, right? So when we break out the different groups, we have a total of 65,000 gallons. We then get to the equivalent units of production. This is important because the equivalent units of production is what's going to determine what units get assigned cost, right? So units are on whole units, and then equivalent units of production are the portion of the whole units that are complete. So if they're not complete, they're not going to be an equivalent unit. If it's not an equivalent unit, it's not going to be assigned the cost for that group, okay? And equivalent units for material, right, are going to be different than conversion, because material and conversion, material is the raw material, conversion is the labor and turning that raw material into something. happen at different times. So here's the example we have. So in this example with the ice cream company, the materials happen up front first, and then conversion happen over time. So as a result, the equivalent units are 100% of the whole units for material cost, because as we take the material, it's completed on the material piece. On the conversion piece, which is the labor and overhead, in this example, only 40% was complete. So because of that, the equivalent unit is going to be 400 gallons, which is the 1,000 gallons multiplied by the equivalent unit, which is the completion percentage. So that will come out to the 1,000 gallons is then transferred or is equated to 400 equivalent units. So 400 completed units. Let me just do this so we can see this better. And we talked about the units here. So here's the material side, right? So group one is the beginning balance. Group one, there are no equivalent units because the full percentage was realized the previous month. So the group one would be the June group three, which is the in process at the end of the month. We said that we're assuming that materials in this example are 100%. So the equivalent units for group one is 0 because the units absorb the cost in June already. In group two, we're saying that the materials were 100% complete. So group two is the items that were started and completed in the month of July. It's 100%. So we take the 57,000 times 100%. And then finally, we have our inventory that the ending inventory balance at the end of the month. So this is the inventory that hasn't been transferred over yet to the next stage of the process. 100% of that has been completed. So we take the 3,000 units, multiply it by 100%. So there's going to be 3,000 units to get cost in the group three, which is the leftover inventory. So when we add all those up, we have 60,000 equivalent units. And the reason why it's not 65,000 is because the 5,000 beginning balance was recognized as equivalent units back in June. So there's no cost to allocate to those items because the cost has already been allocated. On the conversion side, if we look on the conversion side, conversion again is labor and overhead, right? In the beginning balance, 70% was completed as of July 1st, meaning 70% of the equivalent units were recognized as cost back in June. So 3,500 of the 5,000 units have already absorbed the cost. So we don't need to assign cost to those. What we need to assign cost to is the 30% that were completed in July. So that comes out to 1,500 units. There were 100% units that have a conversion that started and completed in July. So that would be 100% of 57,000. So 57,000. And then when we get to the ending inventory is 25% complete for July. So we'll take the units to 3,000, multiply it by the 25% completed. So here the equivalent units are 750. We have 750 units that need to be assigned cost in July. The 2,250 that we're not including is going to be assigned cost in August. That's going to be in August. But for July, we're only going to assign cost to 750 units. We add those all together, we get 59,250. Step 3 is we have to determine the equivalent rate per unit. So we take our total material cost and divide it by the total equivalent units. So total material cost divided by the total equivalent units for both materials and for conversion. So the cost in this example for direct materials is 60,000, and the equivalent units was 60,000, which we got back from here, right? The 60,000 is right here. So the equivalent rate per unit is $1.10 per unit. And then on the conversion side, We had said it was 59,250. We got that from here. I missed it. So on the conversion side, we said it was 59,250 gallons. And we said the total cost is 17,775. So the conversion cost per unit is 30 cents per gallon. Step 4, we have to allocate the cost, right? We have to allocate the cost. My beginning cost is 6,225. So I begin the month at 6,225. And this is from my June balances. On the material side, on the beginning balance, I was 100% complete in June, so there's no cost to assign in July. On the conversion side, I was only 70% complete in June, so 30% of my units need to be allocated cost in July. That's the 1,500 that we had talked about previously, which was over here. This number right here, the 1,500, the equivalent units. We multiply that by the 30 cents per unit, we get 450. So for group 1, which is the beginning balance, we take the material beginning balance of 6,225 plus the 30% equivalent units for conversion, which would be the 1,500 multiplied by 30 cents because it happened to be 30 cents per unit. That's $450. So my beginning cost is 6,675. Step 4, I allocate the 100% equivalent units for both the 57,000 gallons of direct material and the 57,000 gallons of conversion. I take the 57 gallons, multiply it by $1.10. I get 62,700 direct material costs. For conversion, for group 2, I take the 57,000 gallons, multiply it by 30 cents. I get 17,100. So my total cost is 79,800. These costs have been transferred. So the beginning balance plus the finished, started and completed in July will get transferred out. So 86,470 is going to be transferred to my next step in the process. So in this example, the mixing was step 1 in the process. Packaging will be step 2. So packaging will get $86,475 of cost in July. Last piece is I need to figure out my ending inventory. So the inventory that remains, group 3, in the mixing department. So for my direct materials, I had 100% equivalent units. So I take the 3,000 gallons multiplied by $1.10 per unit is 3,300. On the conversion side, only 25% was complete in my ending balance, group 3 for July. So that equals 750 gallons. Which is 3,000 gallons multiplied by 25%. Multiply that by the rate of 30 cents per unit is $225 per unit. So the total cost is $3,525. And then finally, I take my beginning balance to 6,675, add the units in group 2 that were started and completed in July of 79,800. That gives me 86,475 that was transferred to packaging. And then the remaining is what we calculated previously, the 3,525 of ending inventory. So my total cost was $90,000. And that's what we're going to get to there. So remember that there's 4 steps. Step 1 is to identify the units. Step 2 is to figure out the equivalent units of production for each group. Group 1, 2, and 3. Group 1 is the beginning balance. Group 2 started and completed that month, and group 3 is the remaining inventory. The third step is to calculate the unit of cost for both materials and conversion. And then step 4 is allocate the 3 different groups, beginning, started, and completed in the same month and ending. And if you know these slides, it's probably the majority of the questions you'll see on the homework in the quiz. So that's it for this update. Please reach out if there's any questions. And I hope that, that everyone does a great job on the quiz, which will be due on Sunday. Thanks, everybody.